A very good afternoon and welcome to HYCM's online trading workshop with myself, Giles Cochran, Chief Currency Analyst here at HYCM. Hope everybody is doing well and I look forward to taking us through what's going on the current week. Now, I'm just going to give folks a moment to come in, and as folks are coming into the webinar, just going to run through my normal disclaimer, just making it clear that as we talk about different currency pairs, commodities, instruments, this is not an invitation to trade. The whole point of this webinar is to be a learning and an educational webinar so that people are able to understand exactly how someone with a professional trading background goes about making trading decisions. So I hope that this is helpful, and just so you're aware, it's not a signal trading service. Now, looking at as we go ahead, remember on the workshop, we always look at how to decide which currency pair is strong and which currency pair is weak. The whole idea when we're trading a currency pair, we're always looking to trade strength against weakness. So we will start this webinar looking at a strong and a weak currency pair for the session. And don't forget that we will be wanting we will be having opportunity, rather, I should say, to have question and answers during the session. So don't forget, if you've got a question, just type it into the question box, and any trades that you're looking at or any questions that you have, I will get to it at the end of the webinar. That's great. I think most folks are in now, which is good. And I'm going to now go over to a different screen, and we'll start looking at the dominant currency sentiment pair for the day. Now, the dominant currency sentiment pair that we have for today is the euro-yen. Now, I just want to run through what we're seeing in the markets. We are now seeing some typical risk-off flows in the market, and we'll just run through what that looks like. So we're seeing equity futures moving lower. S&P, Dow, NASDAQ, DAX, Euro stocks, all the major indices are moving lower. We're seeing the VIX, the volatility index, moving higher. Now, on top of the commodity and future moves, rather, we are seeing moves lower in bond yields. So we're seeing US 10-year bonds moving lower, German government bonds moving lower through key support, Canadian, New Zealand, Japanese, UK government bonds. So we're seeing bond prices are moving higher, which is pushing yields lower. We are also seeing a risk-off mood in commodity markets. Looking at copper, we can see copper is sinking lower. Crude complex also sinking lower on reduction in supply. Gold falling heavily now as the US dollar rises strongly. So on Monday and Tuesday, we had been seeing risk-off moves in equity markets, but that hadn't been flowing through into the currency markets. The difference today is we're seeing those risk-off moves flow heavily into currency markets now. So we're seeing weakness in the Aussie, CAD, New Zealand dollar, the commodity currencies. We expect them to be weak in a risk-off tone, and we're seeing broad strength in the Swiss franc and the Japanese yen currency pairs, and the US dollar, which is currently acting as a safe haven. Now, what's the reasons for this moves? Well, the reason for these moves are a number of risks. There's been one major catalyst risk today, and that has been news that lockdowns are starting to gain pace in Europe. France is about to announce a 1-month shutdown period. Germany is reported to be considering a 2-week shutdown period. So the rising COVID-19 cases in Europe have now grown to such an extent that national and more serious lockdowns are starting to become part of the political agenda. So this is going to impact the pace of the economic recovery. The euro, this is why the euro has been selling heavily off from the start of the session, making its way down to this key support region here. Now, what we need to be aware of with the euro as well is that we have the ECB meeting tomorrow. ECB's meeting coming in at 12:45. We have the main interest rate decision. And the anticipation is that the ECB have a more bearish twist to their interest rate statement. There's no change expected of the rate, but there is a change expected of the outlook for the Eurozone. Rising COVID-19 cases, the pandemic recovery fund is harder to actually finally get all members to agree on the actual details of it, even though it's been agreed in principle. It's been hard to actually get that pandemic recovery fund. There's some political roadblocks which are holding that up. There's deflationary pressure in Europe. Inflation's been very hard to increase. We also have had a bit of euro strength that the ECB have been, mentioning that they're concerns about as well. So all in all, Christine Lagarde and the other members of the ECB are expected to have a more dovish twist and tilt to their rate meeting tomorrow. So all of this is giving further pressure for the euro. Now, don't forget, for you guys, that I have a Telegram channel, and on the Telegram channel I do have a look at I'm going to send you this message. I'm just going to send a message to everybody. That's the details of the Telegram channel, and I do outline the dominant currency sentiment pairs for the day, and I did highlight the euro-US dollar from this morning. But this isn't the pair I want us to look at today. I want us to look at the euro-yen as the dominant currency sentiment pair. So just going to call up euro-yen. The reason this is the dominant currency sentiment pair is we've got weakness in the euro, and the reason for the weakness in the euro is rising COVID-19 cases, lockdowns in France and Germany. We've also got the fact that ECB are due to meet tomorrow, and they're expected to take a bearish twist, deflationary concerns on the Eurozone, rising COVID-19 cases across Europe generally, and pandemic fund problems in terms of actually getting that authorized and agreed by all the parties. So all of that means that there is a euro downside bias at the moment. We're seeing yen strength. Remember our diagram, we're always wanting to pair strength against weakness. So in this instance, we have strength in the yen, weakness in the euro. That's why we're pairing them together, because we want to see a currency pair that has most likelihood of moving in one direction. That means any retracement back up to this 122.80, 123 region can be considered suitable for shorting, and then looking at taking profit down at this 122.40 level, any return back to this sort of ADR low for the day. We can see above in terms of stops, it would make sense to have stops just riding above this 123.50 level. We have this descending trend line that's just moving down on the daily chart, and so price would expect to remain below that trend line. So any takeout of that price there, and that would tell us that our view is invalidated and wrong. But that is a good potential area to look at shorting, and we'd expect that to be valid for the rest of the North American session. And as long as risk sentiment remains tilted to the downside, then we would expect to find sellers overnight as well. So this could be a trade outlook that lasts into the ECB rate meeting tomorrow. So that's the euro yen. Now, what would invalidate this outlook? Well, what would invalidate this outlook? We had some very positive COVID-19 news. So, for example, if there was some excellent vaccine news, or if we had the French and the Germans reversing their lockdowns, anything like that would be positive for risk and would invalidate this outlook, which is dependent on that yen strength. Also, if we had any positive news out of the Eurozone that indicated the ECB were not going to be taking a dovish twist tomorrow, that also would invalidate this outlook. So they're the ways we're looking at dealing with this euro yen. Other options would be euro US dollar. That would be absolutely fine as well. Remember, the euro US dollar is basically the anti-dollar index. So all we have to do here is if we pop on the dollar index, you'll just see that the euro US dollar just trades in exactly the opposite direction of the dollar index. So dollar index down, euro up, dollar index down, euro up, dollar index down, euro US dollar up, and then as soon as we've got dollar up, euro US dollar down. So you can literally see how this pair moves in the opposite direction of the dollar index. That's why the euro US dollar is called the anti-dollar index. Also remember, in terms of yield spreads, if we just look at the yield spread between the German yield of the 10-year bond and the US 10-year yield bond, we can see that yield spreads are moving lower. Okay, so the yield spread is essentially a risk premium between the two nations. So Germany sort of represents the euro risk premium, and the US 10-year yield spread represents the US risk premium. So as the yield spread for Germany rises in relation to the US, that's better for the euro. As it falls, we see a falling euro, and we can see at the moment that the yield spread between Germany and the US is falling. So the situation for Germany compared to the US is getting worse, obviously on the announcement of the lockdowns. So that falling yield spread means that we expect to find euro-US dollar sellers. And if we just went down to the 30-minute chart, we can see any retracement up to that 118 level would be suitable for shorting, and any retracement now, given the fact that we've flown the nest, so to speak, any retracement to 117.70 and 117.60 would also be suitable for shorting, as long as that dollar strength remains. So what would invalidate this outlook is if we started to see dollar weakness, say we started to see Joe Biden going further ahead in the polls, and the market started pricing in a Biden victory, and medium-term US dollar weakness came back to the fore, then we'd expect to see euro-US dollar strength. Now, in terms of selling the pair, this is not a place to sell. This is a place for profit taking. We've got the 117 key level here and the S3 pivot point. We've seen that we've had buyers here in the past. This is a key level. We wouldn't be surprised to see short-term buyers. We certainly would expect to see some profit takers heading into this zone here. So again, only a trade to look at in terms of joining for the pullbacks. I hope that is helpful. I'm just going to have a look at some of the questions now. Yeah, Schwar's got a question on the gold on the 4-hour time frame. Now I'm going to show you something here. We're going to do this together. One of the things I wanted to show you, special topic for today, was how to use trend lines as low risk entry points on fundamental trades. I'll give you a little tip and I'll show you how to do this. Now, first of all, I'll show you a trade that some of you know that I'm in. Let's just see. I can't open this chart for some reason. I'm just gonna, okay, I'm gonna look at this. Okay, just look here at, right, if you just have a look here, this is a chart, this is a Bitcoin trade that I entered, okay, and I'll show you how I just use trend lines to enter it, okay. Now, I had a positive fundamental bias for Bitcoin recently, and the reason for my positive fundamental bias was as follows. I could see that Bitcoin was just sort of growing in popularity. You could see more and more that Bitcoin was being considered as a digital asset, a digital gold. A number of companies were putting a lot of money, a lot of their reserves into Bitcoin, and they were gaining a lot of popularity in the press. We've had central banks around the world investing in digital currencies. We had earlier, a couple of years back, we had a sort of shift when Facebook talked about having a digital currency called Libra that they would use amongst their billion or so users. That really raised the issue of fundamental cryptocurrencies and digital currencies. We had PayPal last week mentioning that their users, their 360 plus million users, would be able to purchase Bitcoin on the PayPal platform. All of that was kind of showing there's a popularity move. We had hedge fund billionaire Paul Tudor Jones also mentioning his warmth towards actually seeing Bitcoin as a kind of a digital asset of the future. So I have this fundamental bias to buy Bitcoin, and where to enter was the question. So I just used a very simple trend line break. So for me, I entered this trade just down on this trend line break here. So you see, I had this trend line at the time, and that was the high, and I entered in at a break of this 10,825 level. So there you can see the entry was very, very simple. I had the fundamental bias. Now, if price moved back down into this area, I was going to close the trade. Okay. Oh yeah, thank you, Shra. Yeah. So this was the trend line break. Apologies for not putting this up earlier. This is the trend line. So it's very, very simple. And then I had the fundamental bias. So all I did is I used this trend line break as a reason to enter. Now, where would I exit? My stops were and are still running down here, 9,500, 9,600. My stops are right down here. But I was determined to stay in this trade as long as I was above this trend line. So if price had closed back underneath that trend line, I would exit the trade. But because I broke through the trend line and I've stayed above the trend line, I'm staying with the trade. Now, I also then use the trend line to manage the trade further, because I looked at the trend line on the weekly chart. And you can see here on the weekly chart that I got a nice clean break of the trend line on the weekly chart as well. So you see that clean trend break? Now that gave me the confidence to hold the position. We're now heading into some major resistance, okay? Now, technically speaking, this is the place that you would normally take profit, because you're heading into overhead strong resistance. That's the place to take profit, okay? However, I'm holding this because I think there's a lot of chance of US dollar weakness post the US elections. So I'm trying to hold this. Depending on where price is before the US elections, I'm trying to hold it. And I would anticipate buyers on a first test of this 11.8, this 1200 region here. I'd expect buyers there, and then I can trail my stop underneath on the daily chart. Once I get a good swing point, then I want to trail my stop beneath that swing. As it is, I'm still waiting for a decent swing point before I move my stop up from 9,600. So there's just a very simple way. I'll show you that. So that's a trade I was in, and that's how I used this very simple trend line break. I'll keep you updated, and I'll tell you how I manage that. It's always helpful to learn how other people trade, and you learn by that. Now, looking at gold, I'm going to deal with your question now here as well, Sharon. On 4-hour time frame, Sharon says gold is testing fib 61.8 number. Okay, so let's have a look. So we've got 4-hour time frame. Okay, so when we're drawing a fib level, we always go from the highs to the lows. So you go from the highs to the lows. Yeah. And you've got gold testing that 61.8 level. Yeah. Now the problem you've got here, Shra, with this is, why is gold tanking? Gold is tanking lower because the US dollar is strong on risk-off flows. Okay, those risk-off flows are very, very strong. Okay, at the moment we've got euro US dollar dropping on shutdowns in France and Germany. That's pushing the dollar higher. So that's why this would not be a good place really to buy, because you've still got a lot of strength in the US dollar, and the reasons are because of the lockdowns coming. Now, in terms of the US elections, that's also a risk for the US dollar. So there is a risk that these levels get taken out, and this recent lows get taken out here. So in terms of like, where's a great level to go back in with gold, I'll show you, Shwar. So a great level to go back in with gold is here, 1820 and 1760. These levels will be great levels to go in. Right. The other way is to use a trend line break, okay, and just wait for the trend line break. Now the trend line break in gold would now be here, okay? So one way of just waiting is just waiting for that trend line break. And when you get that trend line break higher, going with it, okay? So that's an easy, and then if it breaks back below the trend line, exit. Above the trend line, stay in, below, exit. That's a simple way of dealing with gold at the moment. And you might just want to step aside and wait for the US elections to pass. Okay. Yeah, Shwar, the way you use, Shwar just asked, how do you use Fibonacci retracements? Simply, you just use them. You draw from the left to the right. Okay, so whenever you're doing a fib retracement, say we're doing here like a swing, this is June 20th up to August 20th. Okay, so you just go from the lows to the high, and then you can see that these fib levels just act as support and resistance levels, Shwar. So you can see, you know, if you can see this 50% level has found buyers, 38 level found buyers. Okay, this 61.8 level you'd expect to find buyers. That would be a key area of support. So that would be a great level. So in terms of how to use it, there's your fib level. Always draw it from the left to the right, and the 61 level will be great. Generally, when price gets below that 786 level, generally you expect the pattern to break down and sellers to be in control. Speaking of trend lines, would you consider a retest of a trend line on Euro New Zealand dollar from yesterday as a valid trade? Yeah, let's have a look. Will? So we've got Euro weakness, and we've got the Euro weakness on the lockdowns in Germany and France, right? So we're established on that, right? Now we're looking for New Zealand dollar strength. And the problem we've got here, Will, is that we've got New Zealand dollar weakness today. We can see here broad New Zealand dollar weakness. Now this euro, you know, we're seeing some strong moves coming in. Equity futures still dropping lower, VIX moving higher. We've got the US dollar pushing higher. Now, remember, this is the area expecting to see some resistance. So I think that I would, you know, obviously I could be wrong. I would expect a pause of the move here now. Like, okay, you expect the move to pause. You'd also see here on the dollar index, you just see we're just coming up to this like trend line level here. Okay, so you'd expect potentially some sellers there. Get a break and close above that, and that's opening up the way to sort of 94.45. So that's certainly something to be looking at. And you know, this Euro US dollar story is what's driving it at the moment. The problem I'd have with that Euro New Zealand dollar is that we've got weakness in the euro and weakness in the New Zealand dollar. So you want to find trend lines where you've got that, you know, where you've got this strength against weakness. So look for that, Will. They're the kind of scenarios you want to look for where you've got that clear fundamental bias. So I have no problem with the retest of a trend line at all, but you need to have that fundamental bias. Yeah, Shwar, Fibonacci retracement levels are always drawn from the left to the right. That's the key way to draw them. Now something else to mention is we've got a key risk event coming up, which is the Bank of Canada interest rate decision coming up at 2 o'clock. Okay, so you can see US dollar CAD. US dollar has been strong on the risk-off flows, and we've also seen CAD weak because of oil. Remember, generally speaking, dropping oil drags on the Canadian dollar. So dropping, that correlation hasn't been exactly there recently, but today we're seeing that, and we're seeing the Canadian dollar weaken on the risk-off flows. So we've got a US dollar CAD bias, but 2 o'clock we've got the Bank of Canada meeting. Now, in terms of the Bank of Canada, this is what to look out for. So the rate decision, 2 o'clock GMT time, that is 1 hour, 5 minutes away. They are expected to keep interest rates unchanged, 0.25%. And the key thing to look for, though, there's 3 things. One is inflation. So how happy are the Bank of Canada with the inflation levels as they currently are? And how long will they wait before wanting to raise interest rates? So they said they want, inflation to be around 2% before they raise interest rates. So the market will be looking for a sense of timing about when the Bank of Canada will consider raising interest rates. If they look at staying lower for longer, that will be negative for the CAD, and we see more US dollar CAD upside. If we see them saying like they're more likely to raise interest rates, that will be positive for the CAD, and we'll see CAD strength. So watch out for that. Also, there's the mention of negative interest rates. So they have been mentioning recently that they would consider it a potential tool. So if Governor Macklem of the Bank of Canada starts opening the door to negative interest rates, that's more CAD weakness, and expect strong US dollar CAD buying. So that's one to be looking out for. And then, if they do mention anything about negative interest rates, you could potentially look at rejoining any retracement back to that 132.20 level. Okay, so any retracement back to that 32.20 level can be considered suitable for buying if they open the door to negative interest rates. We also want to look about their quantitative easing approach. Are they looking at tapering quantitative easing, or are they looking at not tapering quantitative easing? If they're looking at tapering quantitative easing, that is positive for the CAD. So we don't want to trade the US dollar Canadian dollar currency pair because we have strength in both the US and the CAD. But if they're not talking about tapering their quantitative easing, they want to keep it as the levels are, maybe even talking about increasing it, that will be negative for the CAD. So we look at buying US dollar CAD. So any CAD traders out there, please be aware of that Bank of Canada rate decision. But they're the 3 areas to be looking at: inflation, quantitative easing, and negative interest rates. Those 3 areas are kind of the key areas to be looking at, that they're the ones not to miss. No, you're really welcome, Will. The thing you got to keep remembering, Will, is keep thinking to yourself, you're not just looking for a decent trend line break. You're not just looking for a good technical break. You're thinking, first of all, get into your head, well, which is the currency pairs I'd like to be trading today? And then start looking at the technical reasons. And that will help you, and you're much less likely to go wrong. So that's why I sort of shared that, that gold fundamental bias. We've got a fundamental bias for gold longs. So, a simple trend line break to the upside would be a great way of joining gold longs. So simple. You don't need to make it more complicated than that. Okay. So just go with a break. You can even wait for a clean break on the daily, and then when you get a clean break on the daily, just join it. Okay. Stops running below the recent swing, and if you go back under the trend line, close out, and then wait to do it all over again. Because we have a fundamental bias for gold. So whether gold goes there or whether gold moves higher, either way, we want to be buying gold because the fundamental outlook is good. Now, what will change this outlook? Of course, it's if the Federal Reserve start talking about raising interest rates. If the Federal Reserve start looking at a quicker economic recovery, they start talking about raising interest rates, gold will lose its appeal and will sell fast. So, that's the sort of way we look about it. Yeah, Warren, where can we watch the Bank of Canada monetary policy statement? I would go and check out Forex Live. So first of all, check the Bank of Canada. I don't know if that, let me just see what the Bank of Canada, they have a website. So let's have a look. Let me just go to their website. There we go. So go to their website and let's have a look. So they've got a rate announcement there, so you can have a look at that, Warren. I'll send that link to you and have a little look at that. Yeah, that, you know, central banks tend to have a pretty good system set up, so you can have a look at that there. I don't know if we've got anything else. Yeah. So here they've got the refreshing it, so you know that will just come straight out. So I hope that helps, Warren. Yeah, no, you're welcome. Okay, everybody. Key thing before I close today, I'm not going to be with you until the US elections back next week. So really be very, very cautious. There's likely to be a lot of volatility coming up over the next few days. So, you know, some people might say, well, this is wiser not to trade. So just to be aware, a lot of volatility. And if you're unsure of any market conditions, just wait, just close the trade out and wait till after the US elections. Because the chances of a surprise are quite high, particularly with Trump and Biden and exactly what happens. Remember, the US election can take days for all the votes to be counted, so we could have a period of uncertainty if it isn't a clear Biden victory. Now, it is expected to be a clear Biden victory. Just looking at the polls, you can see that Biden is ahead in the polls. He's got a reading of 50-80. Trump has a 43 region, so he's got a 7-point lead over Trump at least. But if that lead narrows, then it's less and less likely that there won't be a contested election. So just to be aware of that distinct risk, and it may be wiser just to sit out the market and wait for the next thing. Yeah, it's very hard to trade if the outcome is dependent on the politicians. Exactly, Warren. Exactly. Very well said. Okay, everybody. You all take care. Have a great week. Thank you for your time. And I look forward to being back this time scheduled next week. And we'll see some of the fallout from the US election. We'll be in the middle of that. So I look forward to taking us through it. Everybody have a really good rest of the week. And thank you very much for coming. It's been good to have you. Yeah, thanks, Warren. Take care, everyone, now. Goodbye.